Well, in the UK, after the last couple of years, you pretty much learned to take with a pinch of salt anything that the media is throwing at us. And of course, of late, it's all been about crashes and instability within the property market, and yet we've not seen a huge amount of it. But what have we seen? Okay, so the major thing that's actually had an effect on the UK property market in the last 6 months or so has been the increase in interest rates. That's from the buy-to-let lenders, but obviously pushed from the Bank of England. So what you find when interest rates go up is it scares off a lot of the buy-to-let investors in the marketplace. They think, oh, lending's too expensive now, so we won't enter the market. What that does to the vendors and therefore the property prices is it starts to soften because the vendor is now not surrounded by buy-to-let investors. There's less of them there, so they're more likely to take a cheekier offer and potentially sort of even below market value offer. So at the moment, or has been over the last 6 months, actually a fantastic buying window. Have we seen a decrease in prices? I think we've seen a softening of prices from the very hard prices that we were seeing beforehand. What will happen next though? So sooner or later down the line, we're going to find that increased confidence comes back to the market. Why will that happen? Well, the Bank of England base rate will start to come down as we drive the economy in the UK. The buy-to-let lenders will continue to drop their prices in line with that, and confidence comes back to the market. The market now floods with buy-to-let investors and the prices push back up. I don't think this is sort of a roller coaster scenario. There's been a softening and there will be a firming of the marketplace when more buy-to-let lenders come back to the market. This will of course mean that the below market value property is harder to find, but you'll be able to pay more for it because it'll still cash flow better with your interest rate lower. Make sense? Interest rates high, confidence low, opportunity to buy softer property prices, potentially below market value, a good buyer's opportunity. Interest rates come down, confidence goes high, market floods with buy-to-let, the property prices harden. It's not rocket science. Now, there isn't a bad time to buy property. Sometimes you'll be buying a little bit cheaper, but your interest rates will be higher. It is what it is. You're going to win in capital appreciation. You're probably going to lose a little bit on cash flow. Other times, confidence is high, property prices are higher. You're going to cash flow better because the interest rate's lower, but you're probably not going to win quite as hard on capital appreciation. The last thing we'll leave you with is over our NPP group, we have zero expectations of property market crash in 2023 or the foreseeable future. So if you are standing on the touchline, stop it, jump in and take action. It's the only way to move the whole agenda forward for yourself. Hope we've added some value to you today. Smash that like button. Please remember to hit the subscribe button. We'll see you soon.